The one and only Jamal Mecklai is ready with us, CEO at Mecklai Financial. Jamal, thanks very much for your time. Great to have you with us here, Prashant, this side. You know, I'm going to ask you for some advice today, Jamal. We'll get to the routine, Rupee, etc. in a bit. But just some advice from you. How do I stop worrying and start to learn to love the bull market, Jamal? You know, my general physician calls my wife the warrior.
See, Babu, they are two separate...
How do I stop worrying and learn to love the bull market?
There are two parts to your question. How do you stop worrying is you believe in God. Period. You believe in God, you don't have to worry about anything. Right? To love the bull market, just put some money in the market. So, I mean, the two are not linked.
That's pretty straightforward. But do you believe that some of the reasoning, you know, people who are in the bull market, who profit from the bull market, there's always logic for different logics which are given out for bull markets, right? Do you think sometimes we're getting to a point where some of that actually is getting a little unreasonable, both from the sell side and the buy side?
Oh, without a question. I mean, I think I'm saying that, you know, global markets and as a result, Indian markets are very dangerous right now. Okay? So I don't buy. I mean, I think it's come up a long ways. I think it is going to correct. Right? Now, if you're looking on a 5-year horizon, no question it will go much, much higher. If you're looking on a 2-month horizon, I think it will be lower. But I don't know. But I certainly think that everything, see, commodities are down in the dumps. Right? US interest rates, well, they're likely to go up. Europe, I was with some people yesterday who were explaining to me that European banks are in a deep mess. Stock prices of European banks have tanked to the gutter. So I'm saying it is not like we are in a rock and roll show, you know. So I do not think the market can keep going up. So that's what I stand on the market.
You know, I think rumblings have started. We talked to bankers, corporates. Hello? Rumblings have started that, you know, nothing is happening. Things on the ground are not moving. Reforms are not coming. Loan growth is very slow. But somehow it's all kind of at the end. Everybody says, well, I guess we have to be patient. The government has got the right intentions and they will deliver.
See, I'm not worried about that. See, I'm not worried about the fact that things have not started moving yet, right? It takes time.
Jamal, but
no question about it.
From a financial market perspective, that logic, that reasoning leads to the statement that buy every dip. From a financial market perspective, that logic leads to the reasoning that buy every dip. So you got a 3% fall, buy it. Don't wait. Do you agree with that?
Well, no, I would rather wait for one big dump and then buy. Because I think there needs to be a big dump, not at every dip, right? See, I think the story with, you know, there is, my last column was titled, Modi ka magic chalenga kya? You know, and I think that actually everything that he is doing is correct. On the social side, there are still some issues. You know, I mean, there's still huge number of criminals in parliament. There is still, I mean, the BJP, just like the Congress, is all about money. Now, these are things that have to fundamentally change for India to really become strong. Now, pending that, we can still get moderately strong. And, you know, we are, I think, reasonably much better off than we were a year and a half ago. So and I shouldn't say if, when the global winds blow, we will take a hit, but we will not collapse, is what I believe. Right, so I think that basically we're in reasonably good shape. I think most companies I talk to are reasonably optimistic about growth. See, we're actually torn. You know, I mean, investment will come, but investment is not just what we need. You know, the goal should not be to fill the current account deficit. The goal should be, in my view, to work to change the non-gold current account deficit positive. Which means we have to really start seeing the impact of infrastructure change, productivity improvement, which will take 4 or 5 years. You know, you can't turn this overnight. You know, so I'm saying, coming to the rupee, I mean, certainly I think the rupee's got more way. See, partly because the dollar is so strong overseas, and it's very likely or conceivable that the dollar will continue to strengthen. So the rupee will need to continue to soften. In fact, I think it needs to weaken even more than it has. But we're going to see a lot of volatility. I think overall, I'm always an optimist. I think basically things are going to get better and then a lot better. That's what I believe.
I think you gave the answer to the first question with your last line right now, Jamal. Basically, I'm an optimist. I think that's number one. Not putting money into the market or
right.
anything. Be an optimist, right? Yeah. I was talking
that
to...
That answers your very first question.
Yes. Yes. I was talking to a senior banker at a top private bank. And this gentleman was telling me, and I was asking whether he's seeing projects that he's lent money to moving on the ground. He said the answer is no. He said the reason is this project monitoring group, which puts out these big 1 lakh, 2 lakh crore numbers, which has been cleared. They might have cleared it, but the final clearance needs to come from the ministry. So that is still taking all the time because the clearance needs to come right from the top. And the second point is that in many industries,
Correct.
autos, cement, etc., there is a capacity utilization problem. So, I mean, it's not as if we are operating at full capacity. There's significant slack. So there's a demand issue as well. How do you respond to these two things?
Well, the first, it doesn't surprise me. Like I said, it's going to take time. So, if you have run up the stock market in the expectation that, the music's going to turn up tomorrow, hey, you better take some money off the table, right? It is going to take time, partly also because of A, Mr. Modi's style, and B, the fact that he really doesn't have any, capable people around, or very few. The other question about the demand slack, that is a little concerning, right? Particularly because if global growth does go further down, and if you're already seeing sort of relatively low capacity utilization, obviously things are going to get more difficult. So, I guess what I'm saying is that in the short term, maybe people are expecting too much, right? But I think, like you've probably doubtless heard lots of stories about how the processes domestically are getting better. But it's been a real morass. The guy seems to be clear on how to unwind it, which is really to get people to work, to take... the only problem is, as you said, the decisions all have to come from the top, which slows things down, right? But at least it's the right direction, is what I would say, So again, I'm not a market wala, as you know, so stock market will do all kinds of things, and the more volatility, the more I enjoy it, So I think we are going to see some volatility, both in the stock market and in the rupee.
Yeah, no, absolutely. Do you think, when we say, well, how patient will investors be, and I'm not just talking about equities, but debt, etc. as well. They say, well, 100 days, 4 months, etc. is not the right time frame to start judging and passing judgments. You should wait. But do you think if things don't really start picking up by December, because December, January is the time when foreign portfolio investors look at portfolios again, how much allocation next year and things like that. People might decide to take some money out of India, because most global funds by any benchmark are overweight India. If India is X percentage of weight in a MSCI index, people are at X plus 2, X plus 3, X plus 4 already.
Well, obviously, in which case, clearly the only direction it can be is negative. My point is that I'm not interested in portfolio investment, right? I'm interested in real direct investment and stuff on the ground. I think actually the kinds of things that need to be done, which have not yet come into focus. See, and I'm coming back to the rupee, it's where I live, is that RBI really needs to take some very, very, very active and aggressive steps to deepen the market. You see what happens. In fact, I got a call from a senior guy at RBI yesterday saying, why aren't companies hedging? And I said, Baba, 8% is too high to pay. And they're, of course, concerned because, as Dr. Rajan has said many times, he's worried about the global economy, that when the interest rates turn up, who knows what will happen. Now, the problem we face is that if people don't hedge, and if there is a sort of global trauma, you will see a head for the exits, and the rupee could tank. Now, why the reason for that? The reason for that is because the market is not liquid enough. My concern is exactly on the reverse. I mean, we got damn $20 billion of inflows and the rupee is strengthening. I mean, it's because we should get $50 billion of inflows. People want to invest in India. But if your markets are so thin that these inflows are going to start pushing your rupee to where it becomes uncompetitive, you are in a continuously unstable situation. So I think really right now the key should be RBI should broaden the market by allowing different kinds of players in. I think, over the last year, I'm sure Dr. Rajan feels much more confident in terms of his ability to manage the rupee, right? And I think this is very critical because otherwise we're continually going to be this way or that, And basically, if you have a deep market, then let the money come, let the money go, big deal, right?
Right. You're talking about debt flows, right, Jamal?
I'm talking about all flows. Debt flows, of course, because debt flows are the ones that, in fact, there's some signs that globally debt investors are beginning to get edgy with emerging markets. I read a report which said that, we could see a turning of the debt flows. There's all the money that's been coming in recently. But I'm saying that basically all inflows, I'm saying if your market is deeper, whatever money comes in is not going to materially affect the other parameters. If the exchange rate moves out of whack, your competitiveness suffers, right? One way, or if it goes the other way, inflation suffers. So you really need to recognize that the thinness of the market is a critical problem, and we have to get over this terror of markets, really. I mean, we have to regulate them well. But they do have a role, right? What we've seen over the years was that they were left completely unfettered. They were owned in a sense by the players, and that resulted in disaster. But you don't throw the baby out with the bathwater. You need to slowly start picking it up again.
Can you explain when you said, because RBI said in its statement yesterday that corporates should not get lulled into complacency because of the exchange rate stability that we're seeing, and they should hedge their exposure. You said, well, you got a call talking about the same thing.
Well, I'm telling you, I got a call from a senior guy at RBI asking me what I thought.
Yeah, you said because of the cost. Can you just explain that for our viewers?
See, I got a call from RBI asking what I thought of that.
Yeah.
See, I'm saying that, basically with the rupee, not moving that much, certainly over the last 2 months. Last few days it started moving. But your 12-month premium is annualized premium is 8%. So that's like 5 rupees, right? Now, most people, at least, if today is 61 or 62 right now, they don't want to pay 66 rupees because they don't feel the rupee will go that far. And it's a huge sum to pay, 5 rupees, right? And generally, people, when premiums are high, have benefited by not hedging, except the occasional time when things fall apart. Right, which is the sort of crisis situation we had, when was it, a year ago, right? So I think that that's really what RBI is trying to do. They're telling corporates, they're telling banks to put pressure on corporates to hedge, etc., etc. Now, I don't think that is the right way, I think a company's board should do what they want to do. The hell with it. It's their money, right? And now RBI is looking at the bigger picture, is looking at systemic stability. They want to try to make sure that the system doesn't wobble. But I'm saying there's a limit to what you can do. You can tell people you can't make them drink, right? You've got to do what you can do. So at 8%, very few people are buying forward. I mean, I have a client, boy, I have been fighting with him and fighting with him and fighting with him to cover a little bit. He's covered, I think, some 20%. I'm saying increase it to 35%. He's got huge imports. I'm sure he's going to be calling me right now. Every day this last week I've called him and said, buy some more. He said, but. I said, hey, I don't know, but I think the rupee is weakening. He hasn't yet covered, right? So that's it. Because people still, a lot of people still try to judge the market, which I think is nuts.
Okay, all right. What has been the historic premium, 12-month annualized premium? Has it been this high?
No. I mean, it's varied. There are times when it's been zero and negative. I would guess, and this is just a guess, that the average premium has probably been about 5%, but I don't know.
But
the reason for the premium is the interest rate differential. Yeah. It's the interest rate differential. So now when US rates start going up, the premiums will, come down. But then if our rates go down, the premiums will widen again, right? So probably it's unlikely that the premiums are going to fall very sharply. Because on the one hand, the US rates are going up, and on the other hand, Indian rates are coming down, right? So the gap will likely not vary by too much. So this is a level that we have to live with. I mean, till such time as we can really get, the more we get inflation under control, the lower and lower will our rates go, So the gap will remain, sorry, let me take that back. It's the other way around. If US rates go up and our rates go down, the premiums will come down, right? Because we are higher than the US. And so that is one of the hopes, that over the next year, year and a half, the premiums will come down, and that will perhaps, will doubtless encourage more people to hedge because the cost is not so high.
Okay, all right.
So again, the whole story is we have to get inflation controlled so we can bring interest rates down.
Okay. What did you make of what the RBI said yesterday in terms of interest rates, Jamal? Just a few more questions. They said, well, we want to benchmark ourselves against our medium-term target, which is 6% by 2016.
Yeah, see, I think that he's doing the right thing, on inflation. He's just not letting go, period, which is what is needed. And even if he ends up being sort of over hawkish, it's better than going the other way. Because, you've really got to build your credibility and hold on to it. So I think he's doing the right thing. I mean, I think there will probably be a pleasant surprise sometime in 2015 if he's able to continue to hold the line. Because on the other hand, we're also seeing globally commodity prices collapsing, So a lot of people are saying that rates are not going to go down next year. I don't know. I think we will see some easing towards the end of next year, maybe even sooner, depending on how global commodities work.
Jamal, dollar has seen a breakout, right? What is your view? Where is it headed?
Anywhere. I think it's going to go higher and higher and higher. I mean, it started this decline that ended at 73 a couple of years ago. It started at 120, the DXY, right? Today it's at 86. And it's really broken through lots of resistances. So, I mean, I could see 90, not tomorrow, but soon enough. Which is why my concern is on the rupee, is if the dollar goes up another 5-6%, the rupee is going to have to take some kind of hit.
Do you think the strengthening dollar shows that flows are going back to the home country, back to the US? That's basically what is happening. And if dollar continues to appreciate 90 and beyond, the rest of the world will suffer, and US should do well.
See, some of it money is going back, but also it's also a market. The US economy is growing, Europe is still in a mess, Japan is not doing that well, gold is slipping. We're going back. See, you go back a long time and dollar kept strengthening because it was the only game in town. Then it turned, but see, it's not that simple. I mean, markets have their own logic also, right? I mean, once they start moving, they move. I mean, you look at the yen, right? When it started moving from 102, 103, that's when I first took notice of that, because I know the yen, when it moves, it just doesn't stop. I mean, it's not really specifically directed to so much money went there, so much money went there. There's people taking positions also. So I think that, see, one of the things, right, this rally, which has been, quite clear, the one thing we have not seen is we've not seen a correction. So I was having a meeting with some people on the markets yesterday, and all of us, every single person there, felt that the dollar was going to keep strengthening. And I said, Baba, if everybody believes this, that's a little bit dangerous, So I think one of the things we will see sometime in the next month or two, we will see a pretty serious correction in the dollar rally, right? So from 86, it'll fall, let's say, below 83, to where people will say, oh God, were we wrong all along? And then it'll start up again. So I'm saying there's going to be a lot of action, is what it looks like to me.
Jamal, thanks very much for your time. It's a pleasure. Enjoy your long weekend. Thank you for coming on.